Hi, I'm Larry McClelland, and thanks for watching. Today's topic is personal net worth. Your personal net worth is everything you own of significance, which is your assets, minus what you owe in debt, your liabilities. Assets includes cash, investments, homes, cars, real estate, or anything of value you own. Liabilities are what you owe on those assets. For example, car loans, your mortgage, student loans, and other financial debt. Take a look at what you own versus what you owe. You may own a car or a home or have money in the bank. Add it all up and it could seem substantial. But to truly know what you own, you have to factor in what you owe. Knowing your net worth is important for two reasons. It lets you understand your current financial situation, and it gives you a reference point for measuring progress towards your goals. Ideally, as you continue to earn and save, your net worth will grow. If your net worth is low or in the red, you'll need to work on saving more and spending less. To watch your progress, calculate your net worth now and recalculate it once or twice a year. In order to get to where you want to go, you need to know where you are right now. You can get a view of your financial position by generating a personal net worth statement. Over time, your net worth will change as your assets earn interest or are depleted, and your liabilities increase or decrease. The next important thing is how to set up a personal net worth statement. Setting up a net worth statement is as easy as creating a simple checklist and doing some basic mathematics. List your assets and what you own, estimate the value of each, and add up the total. Include items such as money in your bank accounts. I recommend not to use your bank account of which you pay your bills from, simply because this account fluctuates with this balance. Use an account that you rarely withdraw from, like a savings account. Value of your investments account. You may have some certificate of deposits, mutual funds, stocks, or even a retirement account. Your automobiles, cars, trucks, motorcycles, recreational vehicles, or farm equipment. You can find out the value of these automobiles by using the estimators on sites such as NADA, Kelley Blue Book, Carfax, Edmunds, and Cars.com. The market value of your home. You can find out the value of your home by using some home value calculator on sites such as Fannie Mae, Freddie Mac, Penny Mac, Remax, Zillow. Business interest. If you own a business, how much that business is worth and the value of all the equipment that it takes to run that business. Personal property, such as jewelry, art, and furniture. To calculate the actual cash value, or ACV, of your personal property, take the replacement cash value, or RCV, which is the cost to purchase the item now, and multiply it by the depreciation rate, or DPR, as a percentage and the age of the item. Then subtract the value from the RCV, ACV equals RCV. May sound like a scientific table, but it's not. This is basically, what can I replace the item for and buy it today? Homeowners and renters insurance provide a use calculation formula to pay you if you should ever have to submit a claim. Cash value of any insurance policies. The cash value of an insurance contract, also called the cash surrender value or surrender value, is the cash amount offered to the policy owner by issuing life carrier upon cancellation of the contract. This term is normally used with the insurance or life annuity contract. Next step is to list your liabilities, what you owe, and add up the outstanding balances. Include items such as mortgage. Look at your statement or call your mortgage lender and determine what is your balance you owe on your home. Car loan. Look at your statement or call your auto loan facility to determine what your balance and or payoff of your auto loans. Credit card balances. Add up the balances of your credit cards. Student loans. Do the same for your student loans. Add them all up. Subtract your liabilities from your assets to determine your personal net worth. Why is it important to know what my personal net worth is? Your net worth is important to you because someday you may want to retire, and you realize the greater that the assets and the lower your liabilities, the greater cash flow you're going to have. If you have a negative net worth, how can you survive in the future off just your 401k or your IRA? Eventually, it will run out. In another perspective, what happens to your net worth if you die with a negative net worth? Your family, your children, or your beneficiary will be in probate court trying to sort through all this. I recommend you start looking at this in a serious approach. It only promotes happiness in your life if you stay on top of it. You should evaluate your net worth often. It's not hard at all, but it's very important to your financial freedom. And lastly, if you plan to become financially free or improve your financial freedom, you must know where you are truthfully. In my opinion, I believe every adult should have a generalized idea of what they are worth. This can help motivate you to improve your financial position in life. I leave you with this thought. How can I increase my net worth? Every time you make one of those debts smaller or one of those assets grows more valuable, your net worth will increase. It's always a plus to pay off some debt. This will increase your net worth. Reducing your spending habits to only necessities will also help to increase your net worth. Now, if you like this video, hit the like button. And if you'd like to see more videos I publish like this, hit the subscribe button. And if you know someone who might benefit from this video, share it with them. See you next time. Secure the bag.